All right, so we're diving into FiscalNote's Q4 2024 earnings call today.
Sounds good.
Like always kind of breaking down what matters, what's interesting, and, kind of giving everyone a shortcut so they don't have to parse through all the jargon themselves.
Exactly, making it a little easier for everyone.
So FiscalNote finished out 2024 with revenue of $120.3 million total revenue for the year, and $29.5 million of that came in Q4.
Wow.
Yeah, they had a pretty strong finish to the year.
Yeah, and I think that's also reflected in their adjusted EBITDA, which for the full year was $9.8 million.
Yeah, and their adjusted EBITDA for Q4 alone was $3.3 million, which actually exceeded their guidance.
Yeah, that's a big jump. They're clearly doing something right.
And they're projecting continued strength going forward too, right?
Right, they're projecting that total revenue for 2025 will come in between 94 and 100 million.
Okay.
And their adjusted EBITDA will be between 10 and 12 million.
So it seems like a big theme here is profitability.
It really is. They're very focused on it right now.
So how are they actually going about that?
So they're undergoing this big operational transformation.
Okay.
And that's really what drove a lot of the improvement in their adjusted EBITDA margins in 2024.
So it's not just cutting costs across the board.
No, it's more strategic than that. They've been streamlining their management structure, trying to be as disciplined as possible in their operations. And they've even discontinued some initiatives that weren't profitable.
Interesting. So they're really trying to hone in on what works.
Exactly. It's all about finding the sweet spot for growth and profit.
And it sounds like this focus on profitability is going to stick around even as they go through some big changes.
Absolutely. They're projecting that 10 to 12 million in adjusted EBITDA for 2025, even as they're planning to divest Oxford Analytica and Dragonfly.
Right, which is pretty significant.
It is, yeah. And if you look at it on a pro forma basis, that EBITDA guidance actually represents a pretty big increase in their profitability margins.
Wow. So even as they're making these moves, they're keeping that profitability front and center.
Yeah, they're really committed to focusing on their most profitable areas and simplifying their product portfolio.
Makes sense. So it's kind of working smarter, not harder.
Exactly.
And along with this profitability push, it seems like they've been pretty active in managing their debt.
Yeah, they've made a really considerable effort to reduce their senior debt throughout 2024.
Which is a big step towards a healthier, financial picture.
Definitely. It gives them a lot more stability and flexibility.
And you mentioned the divestitures of Oxford Analytica and Dragonfly. Those play a role in that too, right?
Oh, for sure. They expect those divestitures to close by the end of March 2025.
Okay.
And once those are done, they anticipate that their senior debt will have been reduced by over 60% in just the past year.
Wow.
That's huge. It shows their commitment to deleveraging and improving their financial position.
And that has to have a pretty big impact on their bottom line, with less interest to pay.
Exactly. Yeah, their anticipated cash interest payments are going to decrease proportionally to that debt reduction.
So it frees up more capital for them to reinvest in the business or, do other things strategically.
Right. And they're also being really disciplined about their capital expenditures.
Okay. How so?
Well, they're consolidating all their policy products onto their new FiscalNote platform, which should make things a lot more efficient.
And they're aiming to improve their cash flow too, right?
Yes. They're making a clear push for positive free cash flow, and their cash flow from operations already improved by more than $30 million in 2024.
Yeah. So they're on the right track there.
They seem to be making real progress.
Now, switching gears a bit, what's their long-term growth strategy? How are they thinking about continuing this momentum?
Well, product innovation is a big part of it.
Okay.
They believe that investing in their products is absolutely crucial for engaging customers, keeping them around, and ultimately growing revenue.
Makes sense. So what are some of the key product developments they're focused on?
Well, a big one is this platform they launched in January 2025 called FiscalNote.
I've heard of that, yeah.
It's really interesting. They're calling it an AI-first platform, and it's basically designed to bring all of their policy-related data and content into one streamlined interface.
So kind of a one-stop shop for all things policy?
Exactly, and it leverages all the power of AI to make things easier and more efficient for users.
And how's the market responded to it so far? Are customers actually using FiscalNote?
The early signs are really promising.
Why?
They're seeing strong engagement, good adoption trends, and the customers who are using it are really taking advantage of all the advanced AI features.
So it's not just a flashy new product, it's actually delivering value.
Right, and that's what's really encouraging. Customers are reporting that these AI features are actually helping them in their work.
That's great to hear because that kind of real-world impact is what drives long-term success.
Definitely. And all of this increased activity on the platform is a really good sign for customer retention as well.
So it's not just about attracting new customers, it's about keeping the ones they have.
Exactly. And they've been getting a lot of positive feedback on Policy Note, too.
Oh, yeah.
Users are saying it's intuitive and easy to use, and that it's actually making a tangible difference in their organizations.
So it's living up to the hype.
It seems to be, and this positive reception has also given a boost to their sales and marketing efforts.
How so?
Well, they're seeing more inbound interest from potential customers, and they're having more success converting those leads into paying customers.
So Policy Note is kind of creating this positive feedback loop.
Yeah, it's generating excitement and attracting new business.
Now, what about their existing corporate clients? Are they showing signs of confidence?
They're actually signing more multi-year agreements for the corporate policy business.
Okay, so they're committing for the long haul.
Right. In Q1 of 2025, the share of new logo ARR from these multi-year agreements actually almost doubled compared to the same period last year.
That's a great sign.
It really is. It shows that their corporate clients believe in their vision and are willing to invest in a long-term partnership.
So it sounds like even though their 2025 revenue guidance might seem a little cautious on the surface, they're actually setting themselves up for some significant growth further down the line.
That's right. They're really banking on Policy Note to be a major driver of growth in the future.
Now let's zoom out a bit and talk about the bigger picture. What are some of the market trends and dynamics that FiscalNote is dealing with right now?
So they did acknowledge a few headwinds. Their ARR growth at the end of 2024 was a little softer than they'd hoped for.
Okay.
And they've already made some management changes to try and address that.
Interesting. So they're not shying away from making tough decisions.
Not at all. They're being very proactive.
Good. And they're also aware of the current economic uncertainty, especially in the private sector.
Right. That could definitely affect corporate spending decisions.
So they're being realistic about the challenges.
They are. And what about the public sector?
What about it?
They have a pretty big presence there.
Oh, absolutely. A big part of their business.
Yeah. Right. So are they seeing any effects from, all the recent changes in the federal government?
Well, they did mention some volatility in that sector.
Okay.
But their main value proposition for government agencies is helping them be more efficient.
Right. And that's always relevant, but especially now when government spending is under so much scrutiny.
Exactly. So it seems like they're positioned pretty well to capitalize on that.
And they've estimated that for every dollar the government spends with them, they can save over $6.
Wow. That's a pretty compelling argument.
It is. Yeah, it really highlights their potential impact.
So even though there's some uncertainty, having such a diverse range of clients must give them some stability.
Oh, definitely. They have over 4,000 customers across lots of different industries, so they're not overly reliant on any one sector.
That's good for weathering any storms.
Exactly. And their strategy of automating policy and regulatory workflows should help them increase their share of wallet with those customers over the long term.
So building those deep relationships and becoming indispensable.
Right, that's the goal.
All right, let's dig into some of the specific financial numbers they reported. Subscription revenue is still the biggest part of their business, right?
It is. In Q4 of 2024, subscription revenue accounted for 92% of their total end-of-quarter revenue.
Wow, so the vast majority.
Yeah, and their annual recurring revenue, or ARR, was $107 million at the end of the quarter.
Okay, and how about customer retention?
Their net revenue retention rate, or NRR, was 98% in Q4.
That's pretty solid.
It is, although they are working on improving it even further.
Of course, always room for improvement.
Exactly. But what's really impressive is how much progress they've made on the cost side.
Oh, yeah.
Their principal operating expenses actually decreased year over year in Q4.
That's great.
Yeah, it's a big sign that their efficiency measures are working, and the divestitures they've done are also helping with that.
So a multi-pronged approach to cost management.
Exactly. And they've seen some really significant decreases in specific areas like cost of revenues, R&D sales, and marketing and G&A expenses.
So it's not just one area. They're
Yeah.
really tightening things up across the board.
Yeah, they're really focused on operational efficiency.
And all of that's contributing to their improved margins, right?
Right. Their adjusted gross margin in Q4 was 87%.
Now, did they report a profit or a loss for the quarter?
So their GAAP net loss for Q4 was $13.4 million.
Okay.
But that's actually lower than the previous year.
So an improvement.
Yeah, and that's mainly because they didn't have that big goodwill impairment charge that they had in Q4 2023.
Okay, so it's worth noting that context.
Definitely. And their adjusted EBITDA for the quarter was positive $3.3 million.
So even though they're still technically reporting a loss, Their underlying profitability is getting better.
Exactly.
Now, what's the current cash position?
They ended the year with $35.3 million in cash and cash equivalents.
Okay, and their debt.
Their senior term loan balance is down to $89 million.
So a significant reduction.
Yeah, they've really chipped away at that debt.
And lastly, what's their guidance for Q1 2025?
They're projecting total revenue between $26 and $27 million.
Okay.
An adjusted EBITDA of around $2 million.
So all in all, it seems like a pretty positive picture. You know, they're focused on profitability. They've got this promising new product launch with PolicyNote. They're managing their debt well, and they're navigating these market uncertainties as best they can.
I think that's a really good summary. They're definitely a company to keep an eye on.
Absolutely. Now, before we wrap up, let's do our This Is Not Financial Advice segment.
Okay, always fun.
So based on everything we've discussed, do you have any outrageous but plausible trade ideas for our listeners?
Let me think. Okay, well, FiscalNote is really emphasizing those efficiency gains their solutions offer to government agencies, right?
Yeah, and it seems like that's becoming even more important in the current climate.
Exactly, and there's also this big bipartisan push for better cybersecurity in government.
Right, it's a huge concern.
So here's an idea. What about a long position in a small cap ETF that focuses specifically on companies providing cybersecurity solutions to government entities?
Interesting. So kind of like a bet on the broader trend of government technology adoption.
Exactly. If FiscalNote's value proposition around government efficiency really takes hold, it could create a tailwind for that whole sector, especially in areas like cybersecurity where there's already so much focus.
Makes sense. And, you know, smaller companies in that space might have more room to grow.
Right. They could see some really outsized gains.
All right. What's your other idea?
Okay, so this one's a bit more direct, but also a bit more speculative.
Let's hear it.
So FiscalNote's expecting that ARR growth to pick up in the second half of 2025, and they're projecting sustained GAAP revenue growth in 2026.
Driven by PolicyNote.
Exactly. So what about a long position in FiscalNote itself?
Okay, I like where you're going with this.
But there's a catch. Of course, this is a speculative play, so it's important to be cautious.
Always got to manage risk.
Right. So maybe a good entry point would be after their Q2 2025 earnings call, but only if they give really strong positive commentary about how PolicyNote's adoption is going and if they have a strong pipeline for future growth.
So you're saying wait for confirmation that things are really on track. No.
Exactly. And to manage risk, a tight stop-loss order just below recent lows would be crucial.
Yeah, that way you limit your potential losses.
Right. So it's a high-risk, high-reward kind of play.
Outrageous, but plausible indeed. All right, everyone remember, this is not financial advice.
Not at all. These are just ideas for you to think about.
Always do your own research before making any investment decisions.
Absolutely.
All right, so to wrap up our deep dive into FiscalNote's Q4 2024 earnings call, it's clear that this is a company that's really committed to improving profitability. They're doing that through operational discipline, strategic divestitures, and a focus on their most profitable areas.
Yeah, and their new PolicyNote platform is a big part of their future growth strategy.
Definitely. And while they're facing some short-term headwinds, their efforts to reduce debt and their progress towards positive free cash flow point to a potentially brighter financial outlook down the road.
I think that's a great takeaway.
So hopefully this deep dive has given everyone some valuable insights into FiscalNote's recent performance and their future plans.
Yeah, I think we covered a lot of ground.
We did. And as always, we encourage everyone to go check out the original materials themselves and form their own opinions.
Always good advice.
And join us next time on Talk Tickers for another breakdown of a crucial earnings report.
Sounds good. See you all then.
Thanks for listening, everybody.
Bye.